When we start setting up the bot and head into the control panel, the very first decision you need to make is where you want to trade. You have the choice between Bybit's demo account, also known as Testnet, and the Mainnet, which is your real account. Keep in mind, Bybit uses completely different API pages for these two platforms. If you decide to test the system on demo first, you need to get your API keys from the demo platform. But if you want to jump straight into trading with real money, you must generate those keys from the mainnet page. They are completely different systems, so make sure not to mix them up. Now, before we actually give the bot permission to run, we need to go into the settings and enter all the required data step by step. Here we paste the exchange API key and the API secret, as well as your Telegram token and chat ID. Right there, you'll also see a debug toggle. This is an advanced logging system. If you turn it on, the bot will provide much more detailed and in-depth information about every single action it takes. All right, let's move on to the most important part, the very foundation of this whole system: selecting your trading pairs and managing your capital. The number of pairs you enter into the bot is directly tied to the amount of capital you have. My recommendation is to keep the standard allocation for each pair at 0.07%. Let's do the math. If you have 10 pairs and you enter each with a 0.07% risk, your total initial position size will be just 0.7% of your entire capital. This is a tiny percentage which allows us to stay as protected as possible against any sudden market movements. Think of this bot and these pairs as your personal portfolio for the bull run, but unlike simply holding, this bot doesn't wait for years. It seizes moments to take profits periodically and steadily grow your balance over time. Because let's be honest, nobody knows if the market will actually grant our wishes during a bull run or how good the season will really be. The bot approaches each pair individually, applying different strategies. Some assets are geared toward aggressive trading, some are more stable, while others trade on reversals. The bot also uses different time frames for different pairs. This right here, is true diversification. Imagine, for example, that Arbitrum enters a losing trend or gets stuck on a position. While that happens, other pairs like Aptos or others with completely different trends and strategies will cover for it. So overall, your balance still stays in profit. Market makers simply cannot counter this kind of strategy. When someone goes all in on a single asset, the system easily spots their gambling pattern, sees their entire balance, and knows exactly where their liquidation point is. But in our case, since the capital is divided into small portions across many pairs, it's impossible for market makers to figure out your overall strategy. This diversification is your biggest advantage. Now let's go over some specific recommendations based on your capital. If you have $100, the bot just won't work. It's simply too little. You won't be able to diversify and you won't meet the exchange's minimum order requirements. It's just too small and not worth it. For $300, you can run a maximum of 2 pairs. In this scenario, your risk profile is exactly the same as scaling up later. For $500, go with a maximum of 3 pairs. At $800, you can choose up to 5 pairs. For $1,000, the optimal number is 6 pairs. And for $2,000 and above, you can comfortably run 10 or more pairs. If your capital is more solid, say $4,000, you can increase the number of pairs up to 20. But remember this one golden rule. If you double the pairs, you must cut the allocation in half. So instead of 0.07%, you would set it to 0.035%. This is necessary so your capital isn't overloaded and your initial position size stays well within reasonable limits. That being said, my personal recommendation is to stick with the 0.07% allocation. This setting has been heavily tested and is the most stable for the system. A lot of people talk about risk management, and it might sound cliche by now, but it truly is the foundation of successful trading. The bot's strategy and logic will minimize your risks, but properly distributing your pairs and capital is ultimately your responsibility. Once you fill in all the fields and hit the start button, the bot will begin its work. It will immediately create its own cache memory where it records every position, entry price, quantity, and all other details. Just remember, until every parameter, including the API keys, is entered correctly, the bot will not start trading. Once we activate the bot, we can view the console, which displays exactly what the bot is analyzing and doing in real time. Currently, the bot is idle because it doesn't have access to the exchange yet, but we can still see the most critical details. For example, when we entered the pairs, the bot generated 10 distinct profiles, distributing an allocation of 0.07% to each. We can see that every single pair is assigned its own unique profile, each with different strategic and diversified parameters. You can find all this detail in the JSON file that the bot generates and uses for its operations. This file contains every bit of data necessary for trading. When the bot is running, don't open the JSON file. The bot uses it as its active memory, reading and writing data every single minute. If you have the file open, it might interfere with the process or prevent data from saving. To check the contents, you should first stop the bot, then open the file. In this file, we see that the parameters for each profile are different. The bot follows a preset internal logic and boundaries that it will never exceed. You should simply allow the bot to generate these profiles for each pair. The programmed code is designed to randomly distribute diversification across your selected pairs. Here we see various time frames, 3, 5, and 15-minute intervals. The take profit levels also change as a percentage based on these time frames. This generation logic keeps everything balanced and fits each pair with diversified parameters. Every pair has its own unique ID, which acts as an identifier in the bot's memory. Basically, if the bot needs to recall or read anything, it checks this file every single minute of every cycle. It updates and functions based on this data. Absolutely everything is recorded here, including the number of open positions and every minor detail. Profile configurations, timeframes, and all necessary data are gathered right here. Each trading pair has its own individual settings, such as RSI boundaries, take profit percentages, TP scaling parameters, and the scale factor. In this specific case, take profit scaling is active and the bot is running in partial mode. You can also see the minimum scaling ladders here. Partial mode is an additional trading type that differs from full mode, creating a strategic contrast within the system. It also determines whether a pair will trade inversely. In hybrid mode, we have a higher time frame that manages the sides, working in sync with lower entry time frames like the 1-minute chart. Every single pair has different parameters. The processes of this entire complex system start from here, and this is exactly what guides the bot. Beyond the parameters, the pairs themselves are different, and this creates true diversification. When we hold various assets, they each exhibit different movements and structures. On top of that, we have individual settings defined for every single pair. This is a complete system where each pair is isolated. Some trade on the 5-minute chart, others have a different scale factor, and the hybrid timeframes are dynamic as well. You can see which pairs are in partial mode and which ones are running in full mode. All of this is vital for the bot. If you delete these files, the bot will lose its entire memory. Regarding indicators, the bot uses the RSI for reversals. But yes, if the risk increases or a position grows significantly, it adjusts the RSI boundaries dynamically. The bot identifies trends based on the current situation rather than using a standard trend indicator. If the market is trending, it uses the RSI to broaden or narrow boundaries depending on whether a position is stuck. If a position hasn't closed for a long time, the bot shifts the boundaries to the opposite side to increase the chances of switching to opposite hedging. For instance, then if you are in a long position and the trend turns bearish, the bot shifts more easily toward the short side because the macro RSI boundaries have changed. If the market remains trending, it continues trading both sides, but the long entries become more optimized due to the shifted boundaries. This is exactly why it is mandatory to have hedge mode enabled on the exchange, so the bot can trade both sides of a single pair simultaneously. Also, cross margin must be enabled for all pairs. The bot switches between trend trading and reversal trading automatically, Adjusting to the market status, it essentially determines a trend based on the status of its own positions. If it sees that a portion of a position hasn't closed for a long time, it recognizes a trend and moves more easily to the opposite side using the dynamic RSI hybrid. It uses a specific formula to slowly move these boundaries up and down. Once the long or short positions finally close, the boundaries return to their baseline. Let's look at one of the risk management features, TP scaling. The standard take profit scaling starts at 20%, but the bot adjusts this dynamically over time. The further away old orders are, the more aggressive the scaling becomes, with a cap set at 70% of its initial take profit percentage. This mathematical precision ensures that the bot stays profitable. All these individual parameters for each pair are stored in the JSON file. The notepad files are used for logging. Everything you see in the console is recorded there. The bot also automatically clears old cache to prevent memory overflow, and so you don't have to worry about manual cleanup. During operation, the console shows the full dynamics: profits, closed trades, prices, and so on. Based on historical data with 10 pairs and a 0.07% allocation, the monthly average profit is usually around 10%. This depends on how many pairs you run and how high you set the allocation. But remember, as allocation increases, so does the risk. Finally, regarding Bitcoin and Ethereum pairs and their minimum lot sizes, Bybit has very strict requirements for the minimum order size on these specific assets. If you have a small capital, say $300 or $500, the bot will still open a position, but it will end up exceeding recommended percent allocation because the exchange's minimum requirement is larger than your set risk. Because of this, on smaller accounts, it's better to avoid BTC and ETH and instead use other altcoins with lower minimum lot sizes. Stick to the top 50 to 100 liquid altcoins when looking for pairs.